All right. Good morning, Monday, folks. Let's do a quick sound check. All right. Good morning, Lorna. Good morning, Mirza. Good morning, Eric. All right, y'all. One of the uglier opens in recent memory. This all reminds me of the COVID days. Bitcoin down 20%, NQ down 5.6, the RUT down 5%, S&P futures down 4%, the Dow Jones futures down 3. You got gold down 2 and crude oil down 1.3. I believe we limit down at minus 7%. NQ goes down another 1.5. We shall get the limit down. But at this point, guys, the market is pretty much as busted as busted gets. We are under the 21 EMA and the 50 from the daily. 200 SMA at 50-50. That might be one level to mark up here. Then if we go check the weekly, and we've had a good-looking weekly. And now this morning, we no longer have a good-looking weekly. Breaks our 21 EMA, really important trend support. We have no more weekly buy signal for the first time since November of 23, and a big momentum break. The score goes from a perfect 12 down to a 3 out of 12. NQ, even uglier over here. Weekly chart, we have taken out the 21, and now they've got to fight for dear life here at the weekly 50. 17,400. But we've got no more weekly buy signal. We have momentum back below zero. We no longer have a beautiful weekly. With a daily 4-hour, 2-hour, 1-hour, 30-minute, 15-minute, 5-minute sell signal to boot. At this point, guys, I don't think you go buy the dip. But man, if they can't hold the weekly 50, she is going to take a dump. And then YM here. YM on the weekly. Back below the 21 EMA. No more buy signal. And momentum breaks negative. The daily chart, which had been looking really bullish. Now the daily chart looks a little more ugly. Under the 21, under the 50. Momentum back below zero. None of that is bullish, and the last hope here would be the RUT. Can the IWM save the market? And I don't think so. I don't think the RUT can save the market. 3 candles take out basically a month of progress. Under the 21, under the 50, all the way back down to that daily 200 SMA. So it's pretty straightforward. S&P's, QQQ, the Dow Jones, the IWM, we've got no buy signals. Not on a bigger time frame like a weekly, and not on a lower time frame like a 1 minute. No buy signals to be found, and we're taking out key support here. All right, the one thing the market did have, despite the pullback in big tech and despite the pullback in the semiconductors, we had good-looking weekly charts. Even the QQQ. And again, the Qs have pulled back pretty good here. Maybe up until last Friday's close, they've kept weekly structure. They've kept weekly trend. The gap down today, they're going to lose all of that. That puts us, until further notice, in a short every bounce kind of market. Now, here's where things can get really tricky, though. The temptation this morning, you want to get short. Everything gapping down, everything getting spanked. Human nature-wise, you've got that temptation to want to get short. Yeah. When the NQ is down about 6%, which ain't often, but when we're down this much, if you're going to look to get short, and mind you, that's about the only thing I can look to do here. But if you're going to look to get short, For the love of risk management, choose your spots wisely. Don't blindly jump in and get short. When we're down this much, the NQ can end up, 1, 2, 3% below a 15-minute 21 EMA. When our lower time frames get that oversold, we could wake up tomorrow to a massive bounce. NQ up 2, 3, 4, 5%. Nothing changes. They can bounce the crap out of it. They're not going to fix anything. Again, pick your spots wisely. You don't want to be the guy or gal who waits until the open, jumps in and gets a short on. Then the market does a tiny little bounce back to a 15-minute or a 5-minute 21. Again, given how oversold we are, a bounce back to a 15-minute or even a 5-minute 21 EMA, that alone can crush your puts. On top of that, think of implied volatility. What do you think the options change for the SPX for this Friday's expiration? What do y'all think the IV is going to look like at the open? The IV is going to be super jacked up. Pick your spots wisely. Jacked up premium. You get short in the hole. Tiny, tiny little bounce can take your puts and cut them in half. My game plan for the open, do absolutely nothing. Let all the dust settle. Be patient. And I'm going to sit back and wait for lower time frame squeezes. That is the game plan. And I'm not going to watch an NVIDIA. I've got zero interest in NVIDIA. I've got zero interest in Tesla, Google, Microsoft, Amazon. I don't think a day at all where you focus on the stocks. I could be wrong, but I don't think any stock out there is going to buck the trend. Focus mainly on the S&Ps and the QQQ. Index first focus. And then I think along with that, a lower time frame focus. What I want to get in a crazy market like this is a little bit of clarity. All right, well, if I'm going and I'm staring at a daily chart, my daily chart's not going to give me too much clarity. We are getting biffed. That's the only clarity I can get from my daily chart. It is getting nasty. But if I want to try to call for a little bounce, I can get a lot more clarity on a 1 minute, 2 minute, 3 minute time frame. More clarity than I'll get on a 30-minute, 1 hour, 2 hour. Index first focus, lower time frame focus, and as always for me, a squeeze focus. Lower time frame squeezes on the indexes. That'll be the game plan for today. And then, a bit more just conversation amongst friends. And none of this really matters. So, just focus on price action. I would also be a little careful, though, holding shorts overnight. Best case scenario, put yourself into day trade mode. I say that to say, again, conversation amongst friends. The selling that we're seeing here this morning might be the big money trying to get their point across. You've got the Federal Reserve is a general statement. The Fed has no freaking idea what they're doing. This might be big money. The folks who are actually in control trying to force the Fed's hand. If there's even the slightest bit of potential for an emergency rate cut, should that happen overnight, I'd imagine you might wake up to a pretty decent gap up the following morning. Everyone and their mama gets short. Then the Fed comes out, they do the emergency rate cut. You might get a little short squeeze. Again, just an idea, but something to keep in mind. But yeah, that is my game plan. Indexes only, lower time frames only, focusing on the squeeze. And aside from that, my friends, it won't be a dull one. If you are looking for a bounce, that's where I think your bigger time frames can be helpful. Where if we jump to the S&P futures, again, I'm going to get my clarity on a 1 minute or a 5 minute. But say I want to call for a bounce. I'd want to call for a bounce at a key level on a bigger time frame. One good example could be, man, that is ugly. One example could be the 200 SMA for the futures. They take it down a little bit more. They go smooch the 200 SMA. All right, I'm going to mark up that level, 50-50 ES. If we get to that level, then I'm going to go stare at a 1 minute and a 5 minute time frame. They pull it back to the 200 SMA. Then the big 3 indicator gives you a 1 minute, 5 minute buy signal. Yeah, we might be a little bit oversold. We might be at a big level of support. And my lower time frames might be saying, yeah, we've got room for a little bit of a bounce. Taking my level from a bigger time frame, but I'm only going to do something at that level based on signals from a lower time frame. Let's go check out some names here. The Carnage, Netflix gapping down to 585. A swift kick to Netflix. Tesla gapping down to 188-ish. So Tesla loses the daily 50, and they're also going to lose their 200 SMA. What about NVIDIA? Oh, man. Oh, NVIDIA. Look what they're doing to my friend NVIDIA. Gapping down to 93. The gap has been filled. Google going to gap down to about 155. Down a cool $10. Now, good example. That gap down for Google should take it right around that 200 SMA. 153-ish. Right. Mark up that 153. See if price can get down to that 153. Then watch your 1 minute, 2 minute, 5 minute time frames. If I'm watching my big 3 indicator and they pull back to what could be a big level of support, if anything, just good for an initial bounce. If we pull back to that level and I can't even get a 1 minute or a 2 minute buy signal, there's just going to be no bounce. Google down to 155-ish. What about the Zon? Ooh. Down to 153, 154. And then a few more here. Our good friend Microsoft tapping down to 387. So you're below pretty much every key level you could have. Below the 50 SMA, we are below the 200 SMA. A little bounce off the 200 on Friday. And they're going to gap it below. Who else we got here? Apple. Now, Apple held up pretty good after earnings. And, and now Apple gaps down to $1.98. So long story short, they're pretty much taking everything out behind the woodshed this morning. They're killing daily structure. I think in a lot of cases are going to go kill weekly structure. Puts us in a short to bounce market. If you want a good rule of thumb, to think bullish and to find spots to buy the market, I want price above my 21 EMA and above my 50. Granted, I look for a lot more, but 2 very basic things. Above the 21 EMA and above the 50 SMA, I want to find a spot to buy it. If that's a good rule of thumb, we're not going to have anything to buy this morning. Not on a 1 minute and not on a weekly. If we go check out some other sectors, though, we had the whole rotation taking place. The great rotation of 2024. They sold big tech. They sold all the semiconductors. They sold XLK. And they're buying Dow Jones. They're buying Dow. They're buying the IWM. They're out there buying healthcare, industrials, financials. How do those names look this morning? JP Morgan, right? The banks. JP Morgan gaps down to 190-ish. getting spanked. Goldman gapping down to 447. Spanked. Healthcare. UNH. What about a UNH? UNH gaps down a little bit. Not as bad as the others. Energy. ExxonMobil down a bit. They shall all go lower. But all right, y'all. For those of you here in the Essentials room, I will be back at 10:30 a.m. Central this afternoon, which kind of fits in with my game plan. Give the market the first hour and change. Let all the dust settle. Let the cookie crumble how it may. And then when I jump back on the mic at 10:30, we will take it from there. But you all know my focus. Indexes only. Right? Couldn't care less about a Google today. Indexes only. Marking up levels of support from bigger time frames, but then looking for clarity and signals on lower time frames, along with the squeeze. But I'm going to let y'all go here. I got a couple things to take care of downstairs, and I've got to make sure I am here for the open. My last piece of advice, especially if you're a newer trader, and mind you, I still struggle with this, almost daily. Believe it or not, we don't have to trade every day. I know, crazy to think, but we don't have to pull the trigger every day. Easier said than done, potentially. For the newer traders in the room, if you didn't trade through the COVID market, might not be a bad morning to just sit back and observe. Versus, hey, I'm going to go short the open. Maybe the NQ can go down 10% today, or you're going to jump in and buy the dip. Nothing wrong with sitting back and being in observation mode. But all right, y'all, I'm going to let you go here. I will be back at 10:30 a.m. Central. And we'll see where things are, trading at that point. Look for a few squeezes. But I will not be in a big rush. Right, good example right here. The NQ is bounced about 1% off the low. And that changes absolutely nothing. On a 1% bounce, they can't even fix anything. But if you're short all the way down here and you're catching that 1% bounce on the chin, very, very uncomfortable. But all right, folks, I will see you at 10:30. Be good this morning.